Welcome back to my channel, ladies and gentlemen. I'm so delighted to welcome you back again to my channel. In today's video, we are going to be discussing about emotions, psychological emotions. So today is not going to be on strategy or training, but today is going to be on emotions. So this video is going to train your emotions, your mind, on how to react in the forex market. So in this video, I'm going to be sharing with you 4 negative emotions that make 99% traders lose their money in the forex market. 4 negative emotions that makes 99% of forex traders lose their money in the forex market. Forex trading is not just about having the best strategy, right? But it's about having the right mindset, because it is the right mindset that will help you to be able to last long in the forex market. Because there are some people who have the best strategy, but for the fact that they have low self mindset, or for the fact that they have the wrong mindset about the forex market, they tend to lose their money. So that is why I decided to create this particular video to train your mind on how to react in the forex market. Because if you cannot be able to control these 4 emotions that I'm about to share with you in this video, then there is no way you can be successful in the forex market. Even if you like train yourself on strategy 100%, if you cannot control your emotions, forget about it. You will lose money in the forex market. That is why I want to be specific in this video. I want to tell you the truth. The truth is that strategy alone cannot help you to become successful in the forex market. You also need to train your mind, your emotions, so that you can be able to trade very well. So in this video, I'm going to be sharing with you 4 negative emotions that makes about 99% forex traders lose money in the forex market. So the number 1 negative emotions that makes forex traders lose money in the market is fear. You have heard the word fear. You know the meaning of fear. Fear is one of the negative emotions that makes forex traders lose money in the market. So many traders are afraid. Fear, honestly speaking, fear has become one of the major reasons that many traders are blowing their account on a daily basis. So for you to become a successful forex trader, you must learn how to control your fear. You must learn how to control your fear. Many forex traders are scared of opening a trade, because if you don't have the morale, the capacity, if you don't have the courage, the confidence to control your fear, then you cannot be able to trade the forex market. So forex market is not for those people that are so scared. Fine, the forex market is very risky. That is understandable. But if you really want to profit from the forex market, you need to remove the emotion of fear from your mind. Fear makes people not to place trade when they meet the right setup. They become so scared of placing a trade. You have done the technical analysis, and the result of your technical analysis is telling you that the market is going to go up, you should buy. Before you know it, fear comes in and you become scared. Instead of placing buy, you become scared. You say, hi, oh, what if I place and I lose this money? Oh, what if I place and I lose this money? What if I place and the trade goes against me? You start panicking. The emotions start coming out. You are afraid of taking trades. So that is what fear does to you. And before you know it, you will miss that trading opportunity. And before you know it, it will go in your direction and you become, wow, are you serious? Because you were scared of placing that trade. Why? Because you are not sure of yourself. You are too scared. You are afraid. So that is why I say fear is one of the negative emotions that is depriving so many forex traders from becoming successful in the forex market. And that is what differentiates the 1% from the 99% forex trader. Because the 99% forex traders, they have all the strategy, they have all the everything, but they don't. In fact, they are scared. They are so afraid of placing trade. Right? So this is one of the negative emotions that causes forex traders to lose money in the forex market. And some of them, these negative emotions can cause them to blow their account, because you have seen an opportunity that you are supposed to place a trade. You become scared of placing a trade. Now, when you become scared of placing a trade and that trade goes in your direction, you become angry. You become angry. You say, wow, what happened? What happened? I'm supposed to place my trade in this direction and I was scared. Before you know it, your emotions start, troubling you. You start thinking abnormally. You start trading with emotions. And before you know it, you just place trade even when you did not even analyze the market, because you are scared. Because of being scared, you miss an opportunity and you become angry that how can you miss such an opportunity. Instead, you now place a trade again, not knowing that this is the time that the market wants to reverse, because the market might start a new trend and you become scared of placing a trade. Right? You are supposed to place a buy trade to go up and you become scared of placing a buy trade, right? And before you know it, the market went up in your direction and you become so angry with yourself, saying, why didn't I place this trade? Why didn't I place this trade? And that emotion start entering into your body. So before you know it, the market continue going up. I say, oh, what is happening? Why is the market going up? Why? And you say, okay, fine, since the market is going up, let me follow the market. And you now place your buy. Maybe when the market has traveled 90 kilometers, you now place your buy trade, not knowing it was that period that you placed your buy trade, that was when the market was about to reverse. Because your thinking did not tell you that the market has reached resistance level, because whenever price reach resistance level, it tends to reverse. So because you are clouded with emotions, you are not able to think rationally to know that once an uptrend gets to resistance level, it tends to reverse. And not knowing that the price have traveled so long about approaching resistance level, that is when you place your buy trade. And then the market now reverse, and then you enter into red position. Before you know it, you start losing your money. So that is why fear is one of the negative emotions that makes forex traders to lose their money in the forex market. The next negative emotion that makes forex traders to lose their money in the forex market is greed. Greed is one of the reasons that many forex traders lose their money in the forex market. In fact, it is because of greed that 99% of forex traders blow their account. So if you have the capacity to control your greed, you will be able to survive the forex market. Because if you don't have that ability to control your greed, you cannot succeed in the forex market. Because if you are very greedy, you place lot size that is bigger than your account. For instance, you have $1,000 account and you go and place 2 standard lot size. Are you kidding me? Not knowing that just 50 or 100 pips, you blow your account. Or you have $1,000 as your trading account and you use 5 unit lot size, 5 standard unit lot size, because you want to make big money. That greed, right? These are the things that makes you to lose money. So if you are greedy you cannot be able to succeed in the forex market. So greed is one of the negative emotions that makes 99% forex traders to lose their money. Now let's say, for instance, now you have the best strategy. Remember, there is no best strategy in the forex market, right? Because there is nothing like 100% strategy in the forex market. It's just a game of probability. What you do, you just do your technical analysis, and then you hope for 80% win rate. Remember that you are going to lose and you're going to win. So there's nothing like 100% win. Even the best traders in the world, they lose. So there are times for winning and there are times for losing. So losing is part of winning. So in forex trading, you will lose and you will win, right? So now, if you have, let's say, $1,000 account, right? You are meant to manage that money by using lot size that benefits that account, right? You have to break down your money management, right? You are using $1,000, right, as your capital. Then you need to take only 1% or 2% from that $1,000 and trade. Like if you have $1,000, you are supposed to use like $10, right, and trade. So that means you are expected to lose $10, right, in a particular trade, not losing $500 or $400, because once you lose $500, your account is bleeding. So it is because of greed that so many traders are placing higher lot size. They are over leveraging their account, and before you know it, they will blow the account. Another scenario again I have to share with you is the stop loss. Many forex traders doesn't put stop loss in the market, right? They don't put stop loss. Why? Because they don't want to lose. Because you know that once the market hits your stop loss, you lose. So even if they are in losing position, they will still hold on to the market without putting a stop loss. Even if they are losing, they will still hold on to the position without putting their stop loss, right? And before you know it, they will blow the account. That is greed. There are some people that they will place a trade and then hope for take profit 50 pips, hoping that if they enter the floating profit of 50 pips, they will close their account. That is their plan. And before you know it, they will start extending their take profit. Maybe they said, okay, if I enter 50 pips floating profit, I'm going to take my trades, right? Or they place take profit 50 pips. For the fact that the market is going in their direction, they become so confident in themselves, they become relaxed and say, wow, this is free money. And before you know it, they will start shifting their stop loss. From 50 pips, they will shift it to 60 pips. And once the market crosses 50 pips and it's about entering 60 pips, that is about hitting their take profit, they will shift their take profit again to 70 pips. That is greed. That is greed. And before you know it, once the market tries to hit their 70 pips, they will shift it to 80 pips. Say, wow, this is free money. And before you know it, the market will just reverse and start heading down. All those your profit will start turning into losses. And before you know it, you will just end up losing that account. And some traders don't even put break even, right? They believe that even if the market goes against them, it will surely reverse back to their direction. So all these things are greed. These are the things that are preventing many forex traders from becoming successful in the forex market. So that is why before you can become successful in the forex market, you need to work on your emotions. You need to deal with these negative impulses in your mind, these negative emotions that is hindering you from becoming successful in the forex market. So that is how you become successful, by overpowering those negative emotions. So like I told you, greed is very, very bad. So if you are someone that is very greedy, it is better you work on your emotion before entering into the forex market. Otherwise, you are going to lose consistently. So if you want to enter the 1% of successful traders in the forex market, you need to control your greed. You need to have self-discipline. You need to have a plan. If you say your target is 50 pips, let it be 50 pips. If you say your stop loss is 20 pips, let it be 20 pips. Some people will plan that their stop loss is going to be 20 pips. Before you know it, they will extend their stop loss to 80 pips. Some will say their stop loss is going to be 50 pips. Before you know it, they will extend their stop loss to 100 pips. What is the cause? Greed. They don't want to accept that they have lost. They are so greedy that they are waiting to grab all the money in the forex market. So it is very important that you know your limit. Know the limit of money that you want to accumulate in the forex market, because if you don't do that, you may end up losing your profits. The next negative emotions that deprive so many forex traders from becoming successful in the forex market is impatience. Impatience is one of the negative emotions that is depriving so many forex traders from becoming successful. Now, why do we say impatience? Impatience is one of the negative emotions that deprive so many traders from succeeding in the forex market. Let's say, for instance, you are about to place a trade. What do? You have to wait for your setup to arrive before you place your trade. Some traders are so desperate. They are desperate of placing trades. Once they enter the market, they will not even analyze the market. They will not even wait for their setup to arrive. They will just place trade. And before you know it, they will start losing. And some will place their trade, right? They will close it immediately. Maybe if they accumulate 10 pips, 20 pips, they will close their trade immediately. But when they are losing, they will not close their trade. They will be praying that the thing should come back. They will be praying, in their mind, let the trade come back. Let the lose turn to winning. They will not close their trade when they are losing. But when they are winning, they will close their trade because of impatience. It's also part of fear. Out of fear, they will close their trade because they will say, hey, let me cash this 20 pips before the market will go against me. So impatience is one of the negative emotions that prevent so many traders from becoming successful in the forex market. Because if you truly want to be successful, you must learn how to control your emotions. You must be self-disciplined. You have to be patient. Wait for your right setup to place your trade. Wait for your right setup to place your trade. Very important. And once that setup arrives, place your trade immediately. Don't think twice. Place your trade immediately before you lose that opportunity. And once you place your trade, you have to relax your mind, relax your nerve, and allow the market play for you. If you have a target, stick to that target. If you say your target is 70 pips, stick to that 70 pips. And believe me, with your technical analysis, your take profit will be achieved. Not when you target 70 pips take profit and target 40 pips stop loss. Before you know it, once your floating profit enters 20 pips, you close your trade. And before you know, immediately you close the trade, you see that the market will continue going to your direction and even cross 100 pips. So why not be patient and wait for your take profit to be hit? So that is another negative emotions that many forex traders are having. Their impatience. They cannot wait for their setup to arrive. They cannot wait for their setup to be confirmed. And like I told you in my previous videos, you must place your trade at support and resistance. But some people will not even wait for price to approach support or resistance level. They will just rush and place their trade. And before you know it, they will start losing their money. So impatience is what is depriving so many forex traders from becoming successful in the forex market. So if you truly want to be a successful forex trader starting from today, you should learn how to control your emotions, especially on impatience. Learn to be patient, because they say a patient dog eats the fattest bone. So if you are patient, you will enjoy the fruit of your hard labor. But if you are not patient. If you are impatient, you are going to lose your hard labor. You lose everything. So that is why it's very important that you become patient. Wait for your setup to arrive before placing your trade. And when you place your trade, wait for your target profit to be hit. Very important. Wait for your target profit to be hit. Don't close your trade immediately you place your trade. Don't close it when you accumulate maybe 10 pips or 15 pips out of fear. Don't close your trade. Wait, exercise patience, and wait for your trade to be hit. Wait for your take profit to be hit. Very, very important. And the last negative emotion that many forex traders are having in the forex market is hope. Many forex traders are having the mindset of hope. Negative mindset of hope. Remember that hope has two mindset, the negative and the positive, right? Hope is not that bad, but it becomes bad when you are thinking negative. Like if the market is going your direction, right, and you have a target of maybe 50 pips, you can hope that your target will be hit. But when you are losing, when you are in losing, you are in red, please don't hope that the market can come back. Don't hope that the market can reverse. Just stay strict to your rules. If your rules is you are going to set 40 pips, please allow your stop loss to remain there, because there's nothing like hope in the forex market. The market just acts the way it likes. So there's nothing like miracle in the forex market, nothing like hope. You just work on your psychology and your emotion. You place your trade and you relax. Either it hits your take profit or it hits your stop loss. That is the game of forex trading. Nothing like hope. Not like you are hoping that. Just place a trade. So if eventually it hits your take profit, you win your game. If it hits your stop loss, you lose. You have already calculated within your mind that this is the amount of money that I'm going to lose, right? And that is based on your stop loss. And you have calculated this is the amount of money I'm going to win, and that is based on your take profit. And that is why I say for you to be a successful forex trader, you must have 1 to 2 risk reward ratio and above. So that is why you have to control your emotions. Don't overhope, because if you overhope on the market, you will get hurt. If you put too much hope in the market, you get hurt, right? You get hurt. So don't overhope. Stick to your trading plan. Follow your trading plan and make sure that you respect your trading rules. If you say you're going to set 40 pips stop loss, set 40 pips stop loss and allow the market to hit your 40 pips stop loss. Don't overextend your stop loss. Maybe you set 40 pips stop loss and the market goes against you, approaching 40 pips stop loss. What you do, you remove the stop loss and shift it back to 80 pips stop loss, and hoping that the market cannot reach 80 pips. Maybe you are hoping that once the market gets to 70 pips or 40 pips, it will reverse and start heading up and maybe break even. But to your greatest surprise, the market will go down the more. And if you keep extending your stop loss down, you are intentionally blowing your account, because it will get to a particular level, it will reach, your account will be gone. So that is why you have to stay very strict to your trading rule. Don't hope in the market. Don't hope for miracle to happen. Follow your rules, because the market doesn't know you. It doesn't care about you. It just acts the way it wants. So your job is to work on your technical analysis, follow your trading plan, make sure that your head is correct, and then trade responsibly. So if you are able to manage these 4 negative emotions, if you are able to control them, manage them, overcome them, promise you, you are going to become successful in the forex market. But if you cannot manage these 4 emotions, no matter the technical analysis that you have, you can never succeed in the forex market, because these 4 emotions are what is depriving so many people from becoming successful in the forex market. Anybody can learn technical analysis in less than 3 months, but these emotions can be developed by having experience in the forex market, consistent trading. Personal experience will help you to develop these particular skills, ability to control your emotions, so you can develop it in the next 3 or 4 years. That is why it takes time for you to master forex. So don't think that you can master forex within 3 months, 5 months, 6 months. You can master technical analysis in less than 3 months, but emotions takes time. It takes years, 3 years, 4 years, 5 years, 2 years for you to be able to master your emotion, for you to be able to control your emotions. So that is why many forex traders are blowing up their account, especially the newbie forex traders. They are the ones that are blowing their account on a daily basis. Why? Because they are not able to control these 4 negative emotions. So if you are able to control this negative emotion, then I promise you that you are going to be successful in the forex market. Thank you, ladies and gentlemen. I think that is all I have for you on today's video about emotions. I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to my channel for more educative content like this, and also don't forget to come back for more updates. Share this video on your social media handle and come back for more updates, because I'm going to give you the best educative content on forex trading in this channel. Thank you. I still remain my humble self, Austin Ikeru, and you all are welcome to my channel, Ostino FS. I will see you again in my next update. Peace out.